Hi, everybody. My name's Lataro. Hope everybody's doing well today. I'm really excited to be able to walk you guys through today's presentation. We're going to be going over, why we're seeing from being people from being super busy, how to get them to, be profitable, right? My name's Lataro, and I have here with me Omar. So, what I want to kind of do real quick before we really dive in, I wanted to, introduce Omar to those that obviously are here to kind of listen to us today. So, what I kind of wanted to go quickly over is on Omar, right? So Omar, he is the CEO and founder of Vergy Consulting. A little bit about Omar. He launched his first business back when he was 16 years old, founded Vergy Consulting in 2013. Shortly after, obviously, his roles in different Fortune 500 companies. Another fun facts about Omar. Omar is an active real estate investor, so he does focus on the commercial side. I know building, renting out, and holding on the real estate side, and kind of like a quick note on Omar as well is we like to do what we preach. So obviously the different things Omar's doing in the real estate side, he likes to go and present to our clients, right? Just to make sure and show you how real life case studies on how things work and how they can help you offset taxes. Last one fact about Omar: he is part of Goldman Sachs 10,000 Small Businesses, and actually, Virgin Consulting was an Inc. 5,000 nominee in 2024. So without further ado, just wanted to welcome you guys, Omar Virgie. Now, sure a lot of you have noticed Hamza's not with us today. Unfortunately, Hamza is out sick, so we are wishing him a speedy recovery. So I've actually gone ahead and stepped in today to kind of help and obviously host for you guys. So a little bit about me. My name is Atara Batayas. I am a senior tax consultant at Virgie Consulting. I specialize in tax strategy and financial advisory for our dental practices. And a couple fun facts is I typically meet with my clients monthly to kind of go over different strategy and growth decisions to make for the practice. And on top of that, we've been helping dentists add in 50K plus in cash flow just by doing better planning and operational tweaks when we're looking obviously at your guys' profit and loss statements and balance sheets and see what ideas we can kind of come up with. Now, that's a little bit about us. Now, I just kind of wanted to, push it off into Omar. I know you've worked with hundreds of dentists. I wanted to see why do you feel so many people feel so busy but are just not very profitable?
Sure. First of all, thank you, Wataru, for jumping in last minute. Hamza wasn't feeling well, and he really wanted to be here. And thank you for the great introduction. This is something that we see every day, right? That practice owners have these three key issues, right? They're really busy, but they're not profitable. And how do you define profitable? I define profitable and the fact that you're able to take home economically, what reflects what you did, that day, that month, that year, and you're able to comfortably take care of your family and your financial needs, right? So they're busy but not profitable. They're looking at a bank statement and saying, okay, well, I had $1 million in collections or whatever, and at the end of the day, I'm still robbing Peter to pay Pan, right? And so the bank balances doesn't tell the story that the financials do. And then when you get hit with a tax bill and you're like, what am I don't have the money to pay these taxes, right? Or number three is, and it can be inclusive of all three of these, is my practice is tied to is to owner production, right? Every dentist knows the fact that, if they go on a vacation, not only are they going to pay for the vacation, but they're going to pay for on the business side where the production is going to obviously not there unless you have temps or something, and they're not going to produce the same amount you do. So what it really feels like is the fact that this dream of practice ownership is really golden handcuffs, right? And so how do we really get to getting the money in the bank that we actually deserve? So I always like to kind of have doctors step back and be like, look, for the purpose of this conversation, you're not a doctor, you're a business owner, right? And every business owner has a journey. And whether it's dental practices or a texturing company or a cupcake shop that's in the corner of your neighborhood, whatever that business is, 99% of business owners, small business owners, don't achieve what they imagined when they were first started their business. And it's because they go through this journey of zigzags, right? They go through this journey of zigzags because they truly don't know what success looks like. What are they really trying to achieve? They don't have an end goal. Where they're trying to get to, and so whether you're a CPA firm owner, and this is an exercise I still do every year, and I started doing 10 years ago. First, 12 years when I first started the business. Right, is what exactly does success look like? What is a goal? What is the amount of income I want to take home? Right, and what is the goal for my business? and really be educated on that because, when you talk to most new practice owners, they're like, yeah, I want to open 3 offices. But there's no well, why? Well, because I've seen other people do it, and it's leads to financial freedom. But it said, does that really tie into what you're trying, what your long term goals are, and the tools and assets that you have? So the first thing really is to try to figure out is, okay, what is my income goal? What because happiness, it depends on, being financially free. And so what is the income goal that you have for your practice, for yourself? If you're the primary breadwinner, or your spouse is also earning, and you're like, hey, this is how much, if I take home this much, I'm gonna hit all the quality of life, you know, checkpoints, right? So what is the income goal for you? And then you work backwards. What we call this is reverse engineering. You reverse engineer and say, okay, if I want to earn $300,000 or $400,000, and then I'm saying take home, as in that's a cash deposit into your personal account after all taxes are paid for and everything. That's where you're taking home to you, your family, your wife, your husband, your kids. What is that income number? And once we know that, then we say, okay, what is the required margin to get there, right? And then you reverse engineer a step further to say, okay, if I'm gonna be operating at 35% or 32% or 30%, margin dental practice, then what is my collections target? And then you work backwards even more. So, okay, how many days do I want to work up per week? Because every single person is gonna have a different goal. You may have a new mom who says, okay, I want to work 3 days a week. That's my goal. If I could define and write out on paper what does success look like, it's almost like a psychological discussion, because it's really like, what does really happiness mean to you, right? Happiness means to this person working 3 days a week, having and being able to have time with her newborn or new kids. Or for another person, it might be the fact that, okay, I want to get to a point where I have 3 practices. Okay, then why? And what's your pathway to get there? So that person is going to be willing to work 4, 5, or 6 days a week, right? So you figure out what the collection goal is, and you work backwards and say, okay, what is my work days per week that that's my target, and that gets you to your daily production goal. It sounds very simple, but kid you not, no one does it. No one thinks of it this way, right? And everyone is chasing next shiny thing, which basically, puts you into a loop. It erodes opportunity, erodes time, which is essential for you to achieving your goal. And then you're not happy, and you wonder why you're not happy, right?
Most definitely. And that's kind of what we've seen a lot in some of our newer clients coming in. They just, they're grinding and grinding and grinding, but they don't have the end goal in mind. So they don't really know what they're working towards, right? But I think you've kind of given a really good example on like what we should be looking at first, and then again reverse engineering all that to go figure out what are we trying to achieve, right? So to kind of quickly recap that, right, is figure out what that end goal is.
Yeah.
Is it a profit number? Is it just I want to, step out at one time, and do I just want to be chair side? Do I want to just run the office? You know,
Right.
or work backwards to figure out, okay, well, this is what we need to do, each week or each day, depending on, our goal at the end of the day.
Yeah. If you don't know where you want to go, then how do you get there? Right. You're going in this thing. Like, how do you set the right goals, and how do you have the right vision? And the reality for most practice owners also is the fact that, the world that we're living in, costs continue to rise,
Yeah.
right? Practice that isn't getting any cheaper. When I started being an CPA 12 years ago, it would cost her between 450 to launch startup. Now that number is close to 650, right? The practice is not generating the income needed to support the owner's lifestyle. So, you're back in that cycle, the fact that, okay, I'm putting all this time in, but I'm earning the same amount or less than I was when I was an associate, as an associate, right? And they're running a practice using the production reports and bank statements. So whenever we have the discussion with practice owners and say, okay, hey, how's your practice doing? They pull the production report and they pull the bank statement. That's how they're judging their practice. But you have to be on the same equilibrium as a market. How does the market judge you? The market's judging on EBITDA, and your practice is your biggest asset, right? And it's also the biggest lever for wealth, right? If you can increase the value of your practice by $200,000, you're not going to pull that same lever in the stock market, or anything else that you're doing, all right? It's your biggest asset. And so knowing the right levers to push and having a strategic mindset. And so because of that, just like any other business owner, just dentists feel alone and stuck because you're in maintenance mode, right? Every small business owner knows the fact that you feel that the feeling of a small business owner is the fact that you're on an island and nobody understands your problems, right? And everyone's, throwing all kinds of various solutions at you, right? But you don't know how to get off the island because you don't have a roadmap, right? Because that's conversations never been had. So how do we start? So you start with end in mind. You reverse engineer your income, right? The reason you're doing a practice or any business, or the reason I'm sitting here or anyone, right, that is just doing business is because you're trying to achieve a certain goal. And everybody has a different definition of what success looks like. For some, it's 5 locations. For some, it's the fact that I want to practice for 6 years, make it profitable, and then sell it, and then take those proceeds and do something else because I don't want to have arthritis. I don't want to have lower back pain. I don't want to be tied to an office for the rest of my life, right? Some people want to have a practice that is a lifestyle practice, right? I'm going to build up a reputation to a point where I'm a great fee for service office, and I'm going to work 3.5 days a week, and that's going to provide me sufficient income to be with family and so forth, right? But I'm not working those crazy hours. What are you trying to achieve? This is where you kind of have a CP and a personal psychology hat on, right? And so when you talk to new clients, right, we're always trying to figure out, okay, what is it? What is your goal? So, if it's I want to earn $400,000 a year, then you say, okay, my margins need to be X, and the progress needs to be at Y. I need to earn X revenue per day, right? So then you start figuring out, okay, how many days do I want to work, and that starts putting together your ideal practice. Because if you build a practice and you bust your butt building an office that you're not happy and it doesn't suit your goals, you're gonna at the end of 5, 7 years be like so many other people and be like, why did I do this? And that's the worst feeling in the world, right? So I'm gonna give an example of a client that joined us this year. Dr. Lee, she had $1 million in collections, but she took about $100,000 home after taxes. Remember, I always think about after taxes because I know this is probably not the right thing to say as a CPA, but at the end of the day, we really care about what you deposit in your bank after taxes are paid. It's what you keep, not what you earn. Somebody could say I make $1 million, but if you're having more cash in the bank at the end of the month than they are, then who really cares, right? And so with her, she had $1 million in collections. She took about 100,000 or so home after taxes. Her schedule was booked, solid. She had solid collections. She was a new mom, and when we talked to her and we said, when we asked her, "So what does success look like for you?" Right? At first, she was very confused when no one asked her that question before. It was always go, 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 right? Graduate, working as associate, as a 1099 associate for a couple of years, get experience, and look at practice to do what I buy, do what I build, do what I buy, do what I build, right? It's just the next keep running and running, running. And so then, we had a discussion with her, and she's like, you know what? I just became a new mom. Honestly, I think I want to work 3 days a week. I know it sounds crazy, maybe even selfish, but I want to work 3 days a week. And I want to own, and I said, let's be more specific. And so what else do you want to do besides them? And she said, I'd love to be able to own rental homes. So, because I want to feel like I have options. Because if I get to the point, the fact that I don't want to push myself, then I want to know the fact that I've got some other way of earning income. And so we said, okay, we're all on goals, right? If you don't write it down, you're going to achieve it. So what's your goal? And she said, I want to own 2 rental properties in 4 years. Okay, great. And I'm like, so how are you currently running your practice? Now are you doing good? And she's like, I think I'm doing good. I'm like, what are you basing it off of? Well, my production schedules, shows, good numbers. And I said, where's your bank cash show? And she was like, well, that's a different conversation. And so, but at least you get on paper the fact, okay, what is success to this client, right? And here's the steps that we need to take to get her to her goals, right? And so the first thing was, she wanted to take, she said, okay, $300,000 take home income is her target. It means that math faculty needs to have $400,000 of income. That after taxes, she'll be able to take home 300,000, which takes care of everything that she wants to do plus more, right? And so what profit margin needs to be in place to be able to achieve this in the most efficient manner? That's 35%. Okay. So $1.1 million revenue at 35% would get us to that number we're going to be at. And at what percentage of collection? 95%. Be realistic. That's a good running office with good systems in place. So what do we need to produce? Well, 1.2 million. So you produce 1.2 million. And if we start off the fact that, okay, let's start off by working 4 days a week, right? We want to get to 3, but but the goal is to let's start off working 4 days a week. Then we need to earn $6,200 a day. So everyone that's that's watching this knows the fact. Then you start doing the math and say, okay, well, how much of this is going to be preventative? How much of this is going to be restorative? How much of this is going to be cosmetic? Obviously, cosmetic will get you there much quicker. And you start figuring, okay, what mix do I want to cater to, right? in fee for service versus PPO. And you start being able to basically have a target. It's like if I want to hit this today, what is the most efficient manner of me getting there? And so that's kind of the first discussion that we had with her, defining an estimation. So the second step was basically looking at, okay, how do we tighten up cash flow? So, in prior to, joining, she had 22% margins and she had a lot of missed tax deductions, which we'll talk about later. And she had tax bills. And so what was happening was the fact that, because, she hadn't estimated taxes properly in the current year, she's paying last year's taxes because she's, got the tax return done and, obviously you have a big balance due, but you also have to pay this year's taxes throughout the year. So she's getting help with a double whammy, which is, and, bleeding her cash flow dry, right? Which she's producing, but it feels like it's all going out the window because you're not planning properly. Secondly, she doesn't have the right X-ray. It's same as a doctor looking at a patient and say, okay, I'm gonna do this procedure with no X-ray, and open dental or production reports without X-rays. They're just a piece of the puzzle. And so when you start putting together a proper financial statement that has, staff costs, lab fees, dental supplies, and it also has what the rest of your industry is paying, right? So we kind of stacked her up against the rest of our clients. We have hundreds of clients, and we said, "Look, this is what most people are paying for supplies and lab, and this is what most people are paying at your stage, at the stage that you are at. This is how much you're paying for their labor, and this is where you are. So, is there an efficiency issue? Are you just overpaying them because you want to make sure the fact that you have coverage and you're creating capacity?" And so when we start driving into those questions, we found efficiencies and expenses that shouldn't be there. And so then, we started moving that needle towards 35%, right? These are intelligent discussions being had because as a business owner, if you are by yourself, you're on an island by yourself, and that's how it feels. And so when there's no one to challenge you, when there's no one to basically look at your numbers and basically be like, huh, why are we doing this? Huh, why are we doing that? Right? Then there's no growth. There's no growth, there's no accountability. And so this exercise of just tightening up cash flow and asking questions and why these expenses are the way they are, why we're spending what we're spending, versus when you have clear data that other people are spending less, that eyes, opens up people's eyes, and that starts having more fluid discussions, right?
Yeah.
So
Oh, MR, actually, somebody just asked, in regards to the production number, is this number that we're looking at net production after write-offs and adjustments?
right, so that's after write-offs, for adjustments prior to whatever we weren't able to collect, right? So just a production.
Perfect.
Yeah.
Thank you.
And so how do we do all the stuff we talked about is regarding the expenses, right? First of all, monthly reviewing of numbers, right? So you have to have an accountability partner. Everyone that has been successful has an accountability partner. I have an accountability partner. I meet with, my coach once a month, and we look at the business, and I'm asked hard questions. Even after at my thing of, running businesses for so long, I am asked hard questions because when you just have one mind and one viewpoint, then you're setting yourself up for all living in a bubble, right? So by having monthly reviews of their numbers and having monthly conversations around those numbers, it creates a knowledge sharing pathway. Setting targets for team members. So we started setting targets for the business, and then she took then those numbers and set it for her team because now she knew which way to go. And so now when you're talking to your teammates, like, what does success look like? It's these numbers, right? This collection rate, this no-show rate, this treatment acceptance rate, this production rate. This is what we should be getting our return on our marketing dollars, right? So having targets for everything, then it becomes very clear who is failing and who's not failing and who's carrying their burden and who's not carrying their burden, right? And then it becomes a coaching discussion. And then, advising her to basically look at her fee schedule. It's okay. And say, when was the last time you updated your fee schedule? And are you at market? And is there room to for you to go back and adjust, right? And controlling staff costs like we talked about. So it's these five different things coming together. Because it's a tangent between goal setting, reviewing your numbers, and having a sounding board. Those three things come together, if done the right way, create amazing movement.
For sure. Definitely helps identify any of the problems trying to get us to obviously what we're trying to get to. So definitely good comments there.
Step three will basically decide the fact that you got to stop running your practice off your bank balance. Your bank balance is not indicative of if your practice is doing great or not, because there's a lot of moving pieces between tax payments and distributions and stuff going out that just and loan payments are going out that just don't indicate whether this practice is successful or not. Right. And so we put together, as she's part of our CFO package, and so we put together what we like to call the Fab Five. Five KPIs. And I like to keep things simple because I understand that as a doctor, everyone's super busy and they have a lot going on. And just, it's not, if you have a simple goals and less goals to look at, there's a higher chance for you achieving them versus if you're going to go and say, okay, I'm going to bulk up and I'm going to gain like 20 pounds of muscle and I'm going to do this and this and this and everything. And those goals are gone by February if those were your New Year's resolutions, right? But if we keep it simple, and our Fab Five is basically revenue, collections, payroll, labor, fixed costs, variable costs, and EBITDA. And so here, obviously these numbers are fictitious for the sake of, privacy of other clients and stuff, but if you look at, as an ideal client, you can see here the fact that, this is their revenue cumulative, meaning the fact that Jan through May number is 908, Jan through April is 722. It's cumulative adding up together. So you can see the red line is basically where we set targets for them in the beginning of the year and say, okay, based off our goal of we want to have this much in profit, let's reverse engineer what the revenue needs to be. Let's reverse engineer what the payroll needs to be. Let's reverse engineer what the fixed cost needs to be. The variable cost needs to be, right? Like we reverse engineer all that, we come up with these goals. And so now 5 months in, this specific practice, is on target with their revenue goals, actually a little bit above target of 908 for the 5 months, right? They're below targeted payroll, right? So they're being more efficient than expected, right? And they have an open position, but they haven't filled it yet because the team is being more efficient with what they have and they being able to hit it without having to add additional headcount. Fixed cost is significantly lower than budget, and that's driven by relooking at all of the administrative costs and overhead costs within the practice. This specific client basically, found a lot of wastage and was able to cut that because those discussions are being had in this manner, right? As far as the variable cost goes, variable cost is your lab cost and your supply cost. Those are basically those going linear with revenue. So you have more patients, you're gonna have more lab costs, you're gonna have more supply costs, you're gonna have more, buying more implants, et cetera, right? So that's pretty much on target. And so what's the story, right? When you're having this discussion with the client, what's the story? The story is the fact that we're on target with revenue, we're being more efficient with our people, so they should get more bonuses because they're handling that same revenue for less headcount, right? Less people in the office. The owner and the office manager company have a deficient about cleaning house when it comes to unneeded overhead and unneeded subscriptions and all that stuff. And this is expected with lab costs, supply costs being on budget, and we don't have much wins there because costs are going up. So we're on target, right? With all the tariffs and everything that's going on. So what does that lead to the end result to? EBITDA, right? So here's the main thing you can see, right? The fact that if by earning the same revenue that we set as a target, but being efficient with our fixed costs and our payroll, we have the differentiator here. And, I don't know if you can see my mouse or not, but the delta here and the delta here just turns into a delta here. And so this is where we projected them to be as far as EBITDA goes, and this is where they are. Right? Now, is it going to change the second half of the year, right? When they bring on more staff for the next level of growth? Yeah. But if the biggest asset in your portfolio is your practice, right? And if we could move EBITDA from here to here, and that's a spread of 100 grand, right? How does that change the value of the practice, right? That changes the value of the practice almost $700,000-$800,000. Now, to be realistic, I'm expecting the second half of the year that the spread's going to be less because when they do end up hiring for that open position and the payroll is going to catch up and everything. So some of that savings will come back, but they're still ahead, right? So if your biggest asset, your most valuable asset is your practice and is based off of, and the practice value is based off of EBITDA, then shouldn't we be paying, close to finish this every month and trying to optimize this? If this is the most efficient manner of us gaining financial freedom, right? And so again, what kind of extra should you be looking at? If you have a practice owner, you should be looking at something that is simple, but it gives you the key things, which are goals versus where you currently stand. And those goals have to tie to what we talked about in the beginning. What is your realistic goal, which where you want to be at? And step four is tax strategy, right? So tax strategy are levers. In her scenario, we were able to activate 199A, which is a free tax deduction, by getting her to get some additional deductions and get her below a certain income threshold, which qualifies her for 199A. And that's like a $40,000 tax deduction just free if you are within a certain income bracket. So how do we get you to a certain income bracket? By putting in additional deductions to get you within that threshold. So you get a bonus, right? You get that deduction that you got, but then you also now qualify for this new deduction, which you didn't qualify for before. So you get almost a free tax deduction. Maximizing 401k and looking at our identity structuring and maximizing how much self-employed taxes are being saved, right? So by pulling these levers, this is like $50,000 to $80,000 cash flow right here. So we improve the margins, that improves cash flow by looking at deductions. We improved planning by setting goals, and you improve taxes, which impact cash flow by optimizing your tax levers, right? And so these things all come together to become a holistic treatment plan, right? It's a holistic treatment plan, and it's a lot simpler than it seems. So what was the outcomes? The outcomes for her basically was, for her specifically, she wanted to buy 2 rental houses, right? So she was able to take the down payment that from the tax savings that she had, and instead of writing that quarterly voucher with the IRS, she wrote a quarterly voucher for as a down payment and got her first rental home. That was her goal. It could be someone else can have a different goal, right? And she's focusing on working 3 days a week. There's still months where she's working 4 days a week, but she's working her way towards getting to 3 days a week by getting that collection number to where she wants it to be, where she can bring in an associate to work some of those cases to give her that additional time off, right?
But correct me if I'm wrong, Omar. I'm assuming a lot of this happened because we were being proactive with her numbers, right?
Correct.
Project out her numbers and figure out what her goals are, uh,
Yeah.
helping unlock those different deductions like the 199A.
Yeah, so you have to, and that's for anything in life. If you don't plan things out, if you're one of those people who writes everything down and plan things out, you notice that things get done, right? Between that and having a partner to have those conversations with, moves the needle in a tremendous way, which then moves the profitability, which moves in the valuation, So what's happening is cash flow is increasing, practice value is increasing, right? Happiness around your career is increasing because you're working less, right? It all happens together. And her goal was to basically have Fridays off. So, recapping, like, she was able to get Fridays off, get her first rental, net 330K income while still paying her team very well. So she's has the peace of mind of having long tenured employees and having monthly advisory calls, right? Having a structured schedule where someone's going to talk to you every month about your numbers and reshift your attention, because as a business owner, your attention is in 10 different places between marketing, treatments, hiring, dealing with vendors, everywhere. And that's why most small business owners can't get past that threshold, is because they lose focus. And these advisory calls are built to basically, let's focus on these 5 things that we just talked about.
For sure. And then if any of you guys feel like, this sounds like me, right? I might need some more help. We are going to be providing you guys with the free ebook Omar wrote over set of loopholes to reduce taxes for our dental practice owners, right? You'll get this in your email. On average, obviously, you can kind of see, everything we're doing with our clients. And again, in your email, you're going to get the webinar, the ebook. You're also going to actually get a link to be able to schedule a call with me or one of our other advisors to kind of go over, what problems you guys may be having, right? I wanted to kind of quickly thank Omar. I do appreciate you being able to jump on and kind of share with us some of your expertise and what we've seen on a day to day with obviously all our clients and you being able to use these case studies. But obviously, again, kind of a quick recap. Biggest thing I've kind of taken away from this is be proactive, have a goal set, right, and kind of work backwards from that, right. So work with getting into with an accountability partner helping you out to achieve these goals. And again, you guys will get that link in your email to schedule a call and kind of discuss any other questions you guys may have. 3 questions that I have. So somebody said, what if I'm already hitting $1 million in collections, but I still feel broke? Where should I look first?
It's like an X-ray. It's gonna be between 3 things: profitability, the margin, right? So how's your cost structure set up? Is your margin optimal or not? It's going to be the easy one is looking at taxes and seeing what things can be done to reduce taxes and what plays can be made to proactively think about taxes for the future. With this new tax bill that just got passed, real estate is going to be a big deal. It was a big deal in 2018, and now it's going to come back and be at play. And if you own your own office building, there's a lot of different strategies to be able to write off more of the depreciation from there quicker. If you are looking to do Airbnb or own houses where you can rent out, there's short-term rental strategies that could be used with this law that got passed. If you are high income and there's ways to look around cash balance plans and defined benefit plans and maxing those out. So, but it really, again, involves having a discussion and say, okay, like, here's what I'm comfortable. And some people may not want to do anything with property. Cool. Let's look at, benefit plans. Some people may want to do rental properties, but they want to do something commercials, but they're not there yet. Okay, well, then you build up a rental portfolio of homes and you sell those homes and cash those out to go into commercial property, right? But everything will starts with like, what do you want to do, and then building a plan around that. So if you're having that problem, I would look at where can taxes be optimized, where can the margin be optimized, and what is your current cost structure in your practice, which needs to be reviewed to see how we can find expenses to reduce and get the margin where it needs to be. You could also have a situation where you have too much debt because if practice is profitable, but all your money is going to paying off loan payments. There might be, we had a client where we were able to introduce them to a bank that refinanced all their loans at a lower rate and combine it all, and it also opens up cash flow. So as a dental CPA, as a internet looking at this as a doctor, I would basically try to diagnose, say, is it a cash flow issue, or is it a profitability issue? Cash flow could be taxes and high debt. Profitability is margins and efficiency.
Two more questions for you, Omar. I have Dr. James ask, never really set an income goal. What's a good place to start? What should I be looking at?
So I would basically first look at what do you need individually to be content in your everyday life, right? Because that reduces a lot of stress. And so when you come up with that number, then you kind of reverse engineer and figure out, okay, what does my practice need to make in order for me to get there? And then you start figuring out which levers, again, as a cash flow lever, as a property profitability lever, which lever do I need to push, or both to get me there. But we as humans and as business owners will do better when we are in an environment where we are less stressed. And we're in an environment where we're less stressed when our needs are met financially.
Got it. Got it. And last question from Dr. Al. What's a good benchmark for staff costs as a percentage of revenue?
And I would say between 25 and 30% is a good benchmark. All obviously depends on the type of practice that you have and what stage of the practice that you're at. That's why sometimes that range is kind of not truly telling a true picture. Because if you have a startup, obviously then the pursuit is going to be really high and you feel like you're on a whack, but you're still in the growth stage, right? So it's kind of better to actually compare a startup to a startup, a mid growth practice or mid growth practice, right? A two-doctor office to a two-doctor office. And then you start basically getting better data to actually have a better comparative against peers.
Perfect, perfect. Thanks again, Omar. Everything today has been super, super helpful. Hopefully, our viewers were able to kind of get some really good information out of this. And again, for everybody here, check your email, get that ebook, look it over, obviously ask questions. And then obviously, if you guys are ready to stop guessing, please feel free to reach out. That's kind of what we're here for, to be able to help you guys out with any questions that we may have. Our information's on the screen. Again, you guys will get that all in your email. But that's kind of wrapping it up for today. Again, thank you guys for joining.
Thank you. Take care, guys.
Here, guys.